Hey everybody, what's up? We are back again with another stock analysis. Today we're looking at Applied Digital. So I've been requested this many times by one guy who keeps asking me, and I totally forgot about it for a while. Now I'm doing it, so we're going to get into it. No idea what this company is about, so this will be a first look, first opinion. But if you're interested, make sure to subscribe. If you haven't, comment below any companies you want me to review. I do this every day of the week. And let's get into Applied Digital. So looking into Applied Digital, we could see technology company, provision and development and operation of data centers, computing power. So primarily focused around data centers, which is a huge thing recently with the whole AI revolution and everything. They need a ton of data centers. So big thing, upcoming sort of industry. For their market cap, it is just under 2 billion, and we could see their target price is at 11.6 with no listed long-term growth rate. So fairly under their target price at 850 right now. Let's get into their growth summary. So a little mixed here. For EBIT and net income, there's an estimate of being negative over the next year, but the 3-year is positive, as well as their only listed sales growth is also very positive. So not too much information here, and it's a little mixed. One thing to note, massive increase in free cash flow expected, which is really solid. So let's get into some of their financials and see where all this is coming from. And hopefully we can look at the income statement here. So for their income statement, this is over a quarterly view. Every single quarter for the past 10 quarters, they have seen a massive increase in sales. And one thing to note with that is that while their sales are increasing, their operating income is also increasingly negative, which isn't the greatest thing. But at the end of the day, when your sales are increasing that much, it could be good long term. However, they really need to get this operating income checked up on. It looks like they took a slight decrease to SG&A over the past quarter, but their cost of goods sold increased a lot. So overall, their gross income is positive. However, their margins are decreasing for that. So I think this company is definitely very growth focused. They're not really concerned with profitability at the moment. So overall, not too bad there. I mean, that huge sales growth is definitely something to be interested in. But so far, I think they're a long way off from being profitable. So, looking at their total shares, they have been diluting a lot and they have been diluting it consistently. So, basically, every single quarter, they are adding more total shares, which isn't great, but again, fueling that sales growth. Eventually, they can slow this down and focus on profitability. But for now, I think they really just want to get sales growth completely focused on. So, next is their balance sheet. And looking here, we can see not too much information. Their total assets have exploded over the past few years, and this does include 2024. So massive increases in their assets. They have 800 million in assets currently. Looks like they do have a lot of debt though. So roughly 400, a little over 400 million in debt compared to 25 million in cash is not great, especially considering 175 million of that is short term. So not fantastic there, but again, fueling the growth. I think we've seen a few other companies that have been fueling their growth a little bit better without needing to go into so much debt and taking out so many new shares. But there's a lot of different ways to do it, and this is just one of them. So overall, doesn't look too bad, especially considering how much their assets have grown in the same time. So overall, I think we can see a ton of growth from this company in the near future. But just need to get rid of some of that share issuing and debt issuing. Eventually, that has to slow down. So every single quarter, at least almost every single quarter, they have had positive net operating cash flow. However, last quarter they didn't. They were fairly negative at 66 million in the red. Their investing activity is consistently negative. It looks like they have been selling off some parts of their business recently. Not a crazy amount, but enough to where it is roughly 60 million worth of assets. They have also been very slightly purchasing some investments, other funds you could see they're putting a lot of money into, and overall it's mostly capital expenditures. Moving down, their financing activities are very positive. Again, we saw a lot of stock issuance, a lot of stock or a lot of debt issuance. So that is basically how they're bankrolling themselves. So definitely something that needs to be lessened in the near future, but overall, obviously, we're focusing on growth here, so it's not too big of a deal as long as they can sustain it. Which honestly, the way their free cash flow is looking, I don't know how sustainable this is. I mean, they are massively diluting their stock, massively issuing debt recently, and their free cash flow is negative 230 million. So and negative 120 million in the last quarter. So if that was over a year, I would be concerned. But having that over the past 2, 3, 4 quarters of huge negatives in free cash flow, this is not going to be sustainable for a very long time. Definitely changes need to be made at some point. Um, it's got to be within a year or two at least, because as we saw earlier, they do not have a lot of cash. They have 24 million in cash. So everything that they lose through their negative cash flows, they need to make that up with either diluting their stock more or issuing more debt, both of which is negative and both of which you do not want to see in a company that you're investing in and want to gain more value out of. So, looking at their segment history, this is a positive. I know I've been a little negative going through those parts, but sales growth is enormous. And again, data centers are a massive industry that's kind of upcoming currently. There's a ton of data that needs to be stored and processed currently in the world, and companies like Applied Digital are completely capitalizing on that. So obviously you could see enormous sales growth recently. Hopefully that kind of growth continues and we can see some profitability out of it. But overall, not yet. One positive thing I will say is that their SGA to sales is the lowest it has been in at least 3 years currently. So a little bit of an improvement there. However, their gross margin is also at 3%, which is the lowest we've seen in a while. Net margin is just about a little bit below, or I should say a little bit above its average negativity. Same thing with operating margin. So there are a few signs of life here showing a little bit of positivity, but overall, I think there's still a lot of work that needs to be done with this company. And one last thing I want to look at is the long term debt total equity. So we are at 85% here, coming down from 200% last quarter. So overall, it's fairly manageable. However, they need to be careful not to go back over the 100, especially 200% range, because that's when their debt load starts to get fairly unhealthy. So that's about it for the financials. Let's take a look and see if we can see what's up with their recent earnings. There should be some documents here that we can look through, and apparently not. We can go to last quarter and look at October. So that is what we will do. But so far, oh, this is for quarter two 2025. So their last earnings report, we can see metrics recap is what we want to look at here. That this basically condenses the most important stuff. So, of course, small company, barely anything here, but huge increase in their hosting revenue. Related party has taken a hit. I'm assuming they're not focusing on this segment anymore and kind of phasing it out. But one thing to note is their EBITDA margin did very, very largely beat the estimate that was available. So 33% compared to 24% is fairly solid. Um, Definitely a positive indicator there at the very least. But let's see if we could get a little bit more information here. Fiscal quarter results. There should be some actual text here that we could look through. So, financial highlights: revenues up 67% from the prior year. Net loss of 4 million. Loss per share of 3 cents per share. So, adjusted net loss of 21 million. Just reading through here quickly. So overall, just I don't know why they put that in highlights, but they took a loss over the past year. Other than that, some operational highlights. Definitive agreements for 160 million private placement financing priced at market value. That is one thing. So it seems like a private company or an investment company is purchasing some of Applied Digital. But one thing to note, priced at market. So a lot of times when these high growth companies need money and they make crazy, insane offerings that massively lower their stock price, and there's nothing investors can do about it, and it's usually very negative. Priced at market is a very solid sign here. That basically means that it won't change their stock price for the most part. So that is a positive thing there. Another thing, it looks like they just expanded their cloud services business overall, which is another good sign for the company. There is some management commentary here if you want to read through this, as well as some updates. I'm not going to read through everything just for the sake of time, but let's now get into their stock chart and we can see where they've been recently. So looks like they are in a fairly solid uptrend recently. They did actually have a stock split, which was 1-for-6. So something interesting there, which, to be fair, you could see their stock price has risen massively. However, also not as much as it could be. So they had a huge run up a while ago, about 3 years ago now, and came crashing down hard from it. I'm assuming just from operational shortfalls and the fact that a lot of data centers are focused on crypto, and that probably came alongside the crypto crash, if I had to guess, as well as just overall stock market and interest rates being so high in 2022. I'd imagine that probably shut down a fairly growth-based company like this and a small company like this. But overall, interest rates are lowering. Crypto's kind of becoming a bit more mainstream again. So the company will definitely see a lot of benefit from that. And one thing to note, because like me personally, I'm not very into crypto, and when I hear it, I tend to get skeptical. For the people listening, the company does not purely focus on cryptocurrency. I'm just saying, with data centers, a lot of that associated with it, some of that market is crypto. That's why I'm just pointing that out as well. Um, so overall, stock price looks pretty solid right now. Obviously, we could see a return to the upper range of where the stock price was, but I don't think it'll come very soon, just based on where they are operationally and financially. I don't think it'll happen soon, but we'll have to see with this next earnings report actually coming out in a few days. So stay tuned for that. Make sure to subscribe if you haven't. And that's all I have for Applied Digital. So thanks for watching. See everybody in the next video.